All right, welcome. Today, we're going to pull back the curtain on something you've probably never heard of, but it's the invisible force that moves trillions of dollars around the world every single day. It's called the FIX protocol. And honestly, without it, modern finance as we know it just wouldn't work.
So, have you ever wondered how a hedge fund in, say, New York can buy a stock on the Tokyo Exchange, like instantly, in the blink of an eye? Well, it's not magic, I can tell you that. It's all because of a universal language, a single protocol that powers pretty much every financial transaction on the entire planet.
You know, to really get why this is so important, we got to go back in time. Let's look at the chaos that came before. On one side, you have the old world. Think frantic shouting on a trading floor, scribbled notes, people yelling into phones. It was slow, it was messy, and man, was it risky. But on the other side, you've got the new world, sleek, super fast, totally automated. The journey from that chaos to this order, well, that meant solving one massive communication problem.
So let's talk about that chaos. Before there was a universal standard, the financial world was, well, it was kind of like the Wild West of communication. There were no set rules, and every single firm just had its own way of doing things. The whole system was this crazy patchwork quilt. I mean, you had traders literally yelling orders over the phone. You had messages coming in on fax machines, remember those? And every tech company was pushing their own special proprietary message format. It was a total recipe for disaster.
And the consequences, they were huge. A misplaced decimal point, a misunderstood order, a fax that got delayed. These weren't just small oopsies. They led to massive financial losses, incredible delays, and so many missed opportunities. As trading volume just exploded in the 90s, this old system, it just couldn't keep up. The industry was absolutely desperate for a solution.
So the solution that finally came along was both incredibly simple and, honestly, revolutionary. What if everyone, and I mean everyone, from the biggest banks down to the smallest funds, just agreed to speak the exact same language? A single shared standard for talking about trades.
The goal was simple, but it was also really ambitious. Create a universal language that every trading system could understand. It had to work for anybody anywhere on the globe, and it had to be flawless.
And that language became FIX. It stands for Financial Information Exchange Protocol. And at its heart, that's all it is. A standard language, a shared set of rules that lets all these different computer systems talk about trades without any confusion.
Here's a great way to think about it. Let's imagine you have a trader at a hedge fund in Paris. For the sake of this story, their computer system, it only speaks French. It knows how to say buy and sell in French, and that's it. Now, when that trader sends an order to their broker over in Frankfurt, we've got a problem. The broker's system only understands German. It's listening for kaufen and verkaufen. That message from Paris, it's just complete gibberish to the German system.
And to make things even crazier, what if that order then needs to get sent to an exchange in Milan? Well, their system only speaks Italian. So now you've got three different parties all trying to make a deal, and not a single one of them can understand the other.
This is where FIX comes in and saves the day. FIX is the universal translator. It's the one shared language that the French trader, the German broker, and the Italian exchange all agree to speak. And just like that, boom, communication is seamless. Everybody understands the instructions perfectly. Okay, so who are these players actually using this language? Well, in the big world of institutional trading, the whole ecosystem really breaks down into three main groups. First up, you've got the buy side. Think of these as the investors. We're talking hedge funds, pension funds, huge asset managers. Their main job is to decide what to buy or sell and then send those orders out into the market to get filled. Then you have the sell side. These are your brokers and big investment banks. They're the middlemen. They take the orders from the buy side and then use all their fancy tech and expertise to figure out the best way to actually get those orders executed. And finally, of course, you have the exchanges themselves, like the New York Stock Exchange or NASDAQ. They're the central marketplace. Their job is to take all the buy orders from one side and all the sell orders from the other and just match them up. That match, that's what creates a trade. Okay, so we know who's talking and we know the language they're using, but how does the message actually get from point A to point B? How does it travel? You know, a really good analogy here is the good old postal system. The delivery part of the equation is something called TCP/IP. Think of that as the postal service. It's the trucks, the roads, the whole infrastructure that physically gets the mail delivered. But you know what? The post office doesn't care what's written inside the letter. That's FIX. FIX is the letter itself. It's the actual content, the words, the grammar of the message being sent.
So here's how it all fits together step by step. A trader clicks buy on their screen. Instantly, their system creates a perfectly formatted fix message. That message zips across the network to the broker. The broker system reads and completely understands that fix instruction, routes it to an exchange, and once the trade is made, a brand new fix message travels all the way back, confirming everything, all in milliseconds. And this right here is a really crucial point to remember. Fix itself isn't actually executing anything. It's not buying stocks, it's not selling bonds. It is purely a communication protocol. Think of it as the messenger, not the person doing the action. Its only job is to make sure everyone involved understands the instructions perfectly. So you might be wondering, why Fix? Why did this particular protocol win out over all the others that were floating around back then? Well, there are a few really powerful reasons. First off, it's an open standard. That means no single company owns it, which is huge. The whole industry actually works together to make it better. It's also extensible, which means firms can add their own little custom bits if they need to. And maybe most importantly, it was built from day one to be super reliable and to work all across the globe. And its reach today is just enormous. Fix isn't just for stocks anymore. Oh no, it is the backbone for trading foreign currencies, futures, options, and all sorts of complex derivatives. It really is the lingua franca of modern finance. It's the engine running behind almost every institutional market you can possibly think of. Which brings us to one last really interesting question. So, okay, we've established that fix is the language, but what does it actually look like? What are the words, the verbs, the nouns, the actual grammar that makes up a real fix message? Well, that's exactly what we're going to break down in the next explainer.